I already explained about master candle, but definitely this is where we go. So we had some sound problems. Now we can start with price action training school. So welcome to price action training school training session. Today we have a bank holiday, and also don't forget that today for all Christians is Good Friday. So I wish you a happy Easter, everyone, for all who are celebrating today. And have in mind that these bank holidays are not ideal days to work, to actually make trades. So that is why we will be using our price action extra session, training session. And as always, before I begin, standard is disclaimer explaining that all CFD and Forex trading are leveraged products, can result in losses that exceed your deposits. And also this presentation is for informational and educational purposes only. This video is not part of the .co.uk website, but the globalnews.com website. Okay, so today's agenda will be master candle tips, ATR pivots, CCI divergence, double top and bottom breakouts, high momentum trading, wolf wave, and compounding. As I said, master candle has already been explained in a separate session of price action trading school. So guys, if you are new to trading, if you are, and I know that there is always new people who come to our trading sessions, well, let me tell you that master candle concept is something that we have already dealt with, but of course if you don't understand, you can always watch a webinar where I explain master candle concept in a deeper way. uh, okay, so before we begin, guys, let me tell you that I will answer all questions later. Okay, and definitely we can start. So master candle tips. Okay, the first tip will be master candle tip. I will open my screen now. Here, guys, this is my screen. Let me show you. Okay, so master candle. Master candle is a candle that has 4 subsequent candles trapped within high and low. Master candle usually should have be in between 35 and 100 and 100 or 150 pips, depending, of course, on pair traded. It's not the same as if you see master candle on euro dollar and on pound yen or pound New Zealand, because you know that those currencies such as pound yen, pound New Zealand are very fast moving, so the range will be much higher. But today we will not talk about master candle basic things, because I assume that you watched and went through price action training school classes. So I will explain what can happen when the range of breakout of master candle is broken. So guys, we will have a lot of historical examples on our chart using master candles. But the good thing is, let's say this was master candle, okay? And this is indeed master candle, because if you zoom in, you can count 1, 2, 3, 4 candles were trapped within the high and low, but there was no breakout. And from time to time, guys, you will not be able to trade master candle breakouts, because you will have no breakout. Simple as that. What you will be having is simply the range of the breakout candle. So if you don't have a breakout, because here in this example you see there was no breakout per original rules of master candle breakout, the first, the second, the third, and eventually the fourth candle should break either high or low, and that can be considered a valid breakout. Now, if you don't see any breakout, as we can see here, that is usually because there was not enough momentum in the market to push the price above interim resistance or interim support. But what can happen, guys? Usually what you will see is that subsequent high or low is broken. Now, there is a trick. If you know, generally this was consolidation, so you can see we had the rectangles, blue, let's say this is some sort of yellowish rectangle, okay? But let's call it blue and yellow. Blue rectangle, yellow rectangle. Everything is trapped within consolidation. High, low, high, low, high, low. You see consolidation. But suddenly, guys, after that consolidation, master candle starts to break out below its low. Don't be confused. This is a valid breakout. It's not per rules of original breakout as we went in price action training school. But sometimes, guys, you need to use your logic. Because here, you see, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Let's say more than a day of price action that hasn't broken through high or through low. So what does it tell you? It tells you that next time high or low is broken, that should be a momentum breakout. And actually, that happened here. Momentum breakout below the low of master candle that held the price for a whole day. Have in mind, this is 1 hour time frame. And if nothing happens in next few hours after the master candle has been broken, well, guys, then you should know that there is probably some sort of consolidation and that next breakout could possibly be traded, although it's not per original rules. It's good for you to know because very often you will see that the range is respected. The range of master candle is respected. And that is what usually counts when we trade master candle. In this example, guys, you can see that after a successful breakout, there was another push into the high and low of master candle. So what does it mean? It means that this range is likely to be retested. One of the biggest advantages in Forex market is historical versus now moment concept. And that is what I've been teaching you. That is what I have been always telling you about. And I don't see that it will change anytime soon. Historical versus now moment correlation between different Forex currency pairs is high. It means that if the price respected a level of support or a level of resistance in the past, it should respect it by all means in now moment. That is why my analysis, one of the reasons and big reasons, while my analysis stands out in comparison to, let's say, other analysis. I mean, you need to have something that stretches out, right? That is why it's usually very accurate. Because I'm not sure why other analysts and traders don't use historical versus now moment concept. Because that concept is one of the first things I have learned when I started to trade professionally Forex market. It's good to have indicators, right? Like stochastics, like MACD. But guys, serious money cannot be made just on crosses, especially not EMA crosses. You need to know where those levels were respected in the past. Usually that level will hold on and will hold in the now moment. And if it breaks, watch for that breakout. But watch here, guys. I mean, this is now moment example. High and low, look at this. High, it didn't break through this master candle high, and then it broke through this low. So what does it tell me? It tells me that if next time price gets here, there is a big chance that it might go even higher. Because the pressure within the range has been building, and usually that happens when price is respected for multiple times. Now guys, watch this one. Master candle again. 1, 2, 3, 4 candles within. Okay, this candle, watch how it was respected. The range was respected to the pip. And then later it broke down, okay, and it broke down, it broke to the upside. But watch how this range has been respected. False breakout, close in the range of master candle. Okay, this breakout is good. This is candle that didn't make another high above this range because this was valid breakout. And watch what happened. After some period of consolidation, breakout was huge. Either way, even if you traded this one, first breakout 20 pips, second breakout 33 pips. I mean, it's not bad, right? Next breakout of master candle high low range 35 pips, and so on and so on. From time to time, the breakouts will not be justified from perspective of let's say risk to reward. But guys, in today's trading conditions, it's not, I have been hearing, and I've been really listening to other people that are always reminding about some perfect risk to reward and so on. The case is today, when you're trading on intraday time frame, what does it mean intraday time frame? It means that you're trading from 5-minute charts to 1-hour charts. That is intraday trading. Because scalping is also, guys, a form of intraday trading. Scalp swings are also a form of intraday trading. Positioning during the day. If you want to exploit 1-hour chart or 30-minute chart, there is usually 1 or 2 positions during a single day. It's also considered intraday trading. Let me tell you guys, in intraday trading, you should not respect good risk to reward. Accuracy is much more significant than its risk to reward. Risk to reward is justified from higher time frame perspective. So guys who trade daily charts, maybe weekly charts, or eventually lowest is 4-hour chart, they should aim for good risk to reward. But if you are intraday trader, let alone scalper, don't pay much attention to risk to reward because you won't be having it, guys. Intraday trading is based on ATR. Look at this. Full ATR of pound dollar for last 14 days is 87. If you use, let's say, 40 pip standard stop loss, or 30, 35, it doesn't matter. My average stop loss is 30, 35 pips on intraday. So if you use, let's say, 35 pips, guys, you cannot have good risk to reward. Especially because you're not aiming for full ATR projection during intraday. And let's halve it down. So you're having, like, you want to make, if the range is 87 pips, 50% of ATR is great. So you want to make 42, 43 pips, okay, on pound dollar. And you need to use 35 pips stop loss. It's almost 1-to-1 risk to reward. Guys, don't be fooled. Don't believe everything that you hear on the internet. Especially don't believe marketeers who will sell you everything just to lure you in forex trading. I am a guy like you also, with more or less experience in forex trading. And I want you to know only the best. And that is why I will not be telling you about fairy tales like use risk to reward. You need to have 1-to-5 risk to reward. It's stupid, guys. It's nonsense. You cannot have 1-to-5 risk to reward if you trade on intraday time frame. I mean, if you go for big risk to reward, more or less, your account will be lost. Daily traders, weekly time frames, that is when you need to use risk to reward. But on intraday time frame, you cannot expect to win 400 pips because ATR is 87. 1-to-5, let's say 150 pips if 35 is stop loss. Really, if the 87 is ATR, how come you will make 150, 160, 70 pips. It's impossible. I mean, from time to time, it will be possible. But more or less, guys, well, the fact is, for intraday trading, you need to be accurate. You need to have good entries. You need to be perfect in picking up entries. 80% successful. If you go for risk to reward, well, I'm afraid that the harsh truth is your account will be in danger. You will not be getting, especially volatility is not the same as if it was for 10 years ago, okay? And more or less, traders who trade on intraday time frames should protect their profits. Only if we see a big momentum, then we know that the target might be reached. Let me tell you, this is what I've been telling you about simple truth in Forex trading. I cannot just speak about or teaching you something that I have not personally experienced. I also had ups and downs in my Forex trading career. And that is why I stopped looking about perfect risk to reward. On intraday time frames, of course. We need to be accurate. We need to go with good entries. Then when we are in profit, we protect it. If you are 70 to 80% successful, your chance is simply doubled, tripled. And the biggest drawback is that this kind of information is rarely hard to find on internet. Because people are just talking, babbling, I need to say, babbling about risk to reward. I really am getting annoyed with all this fake stuff. Risk to reward, just people who trade higher time frames, let them be focused on risk to reward. Intraday traders who want to exploit intraday movements, guys, this is what you should aim. Confluence of ATR, pivots, or let's say your favorite pivot point indicator. This is how you can pick targets. This is the example of a mini range. Watch this, guys. Master candle here, right? This is master candle, a big candle. Okay, this is not a perfect master candle but let's just let's think that this is master candle. If this wick was a little bit higher, then it would be master candle. And then we could, let's say, make it like this. Okay? If this was perfect master candle. Okay? So we would have high, we would have low. Okay? And okay, let's say that this wick is here and then this is master candle. Watch what happened. Again, this is called pressure breakout. If you see that market makes master candle like this, 1, 2, 3, 4. Guys, this is very obvious. This is bullish pressure. So this candle here is very bullish. You see wicks, just watch wicks, guys. If you ever encounter master candle like this, watch next wicks. If you see bullish wicks, 3 bullish wicks consecutively after master candle has been formed, have in mind that the chance of successful breakout is even higher. That is so-called bullish pressure, because you already have momentum that is indicated by master candle. But then again, next candles here are simply now moment buyers. You see here, guys, now moment buyers, and then finally break out to the upside. Watch this, bang. In the main range again has been broken, guys. This was main range. Watch this. Sometimes if you see master candle within the master candle, you can exploit 2 consecutive breakouts. This is the first breakout, indicated by bullish pressure. This is the second breakout. So you can make exponential profits. Try to spot these on your charts and you will see how the ranges of master candle are also very, very accurate. Next thing is ATR pivots and CCI divergence. Guys, simple. I will not be theoretical about this. When is the time to make counter trend trading opportunities? For people who were watching my webinars, they all know that the best time is to go only with big levels. It means big resistance or big support. Okay? Now, if we want to see rejection from a resistance, then guys, we need to use also so-called divergence. Now, let me show you this example. This is here, divergence, guys. Bearish divergence is when price makes a higher high, but the oscillator is making a lower high. So in this example, we can see a nice divergence. Let's say that, for example, we had, and we already can say that this is divergence, okay, from this spot and this spot. So this is divergence. Why the price didn't, simply by watching divergence, why didn't it go down from this spot? Because this is divergence. Because guys, simply relying on divergence is not enough. Okay? It's not enough, guys. You need to align divergence with something that is also very, very accurate, such as ATR pivot points. Otherwise, guys, the problem is that simply jumping in divergence will not be enough for you to make a good trade. Now, the example where we can use good divergence rejection is if we see an ATR pivot exactly aligned with divergence. So let's say if this divergence happened here, although we say that this is also divergence, guys, because the price here has made another higher high and it made another low here, lower high. This is great divergence. Watch this, guys. H5 Camarilla, and let's say that tomorrow, judging from ATR, yesterday ATR top was somewhere around here. So whenever you see divergence at ATR tops or bottoms, that is the way where you can try to think about placing a counter trend trading opportunity. Think about this. This is divergence. This is the start of divergence, but you see the price was not close to ATR top. This is ATR top and you still have divergence. Another higher high, and at this spot exactly, the price has made another lower high here. Similar thing, guys, is with bullish divergence. Higher low on price, lower low on CCI. Higher low on price, lower low on CCI. Also, price needs to be close to important support or resistance. ATR pivot is really great for that, so use it, guys. See here, the price went, this was definitely ATR pivot here because the price went heavily to the downside. Maybe ATR pivot was overshot. Another thing to use a divergence counter trend trade, and watch what happened. Next thing what I wanted to what I wanted to tell you about is double top and double bottom breakouts. Double top and double bottom breakouts are always important to watch for. Simply because, guys, when double top or double bottom is broken, you will see some movement unless it's a fake breakout. Here we can see the example of fake and good breakout. So here, this is fake breakout, okay? And here, this is good breakout. But how can you distinguish between good and fake breakout? You can't. But there is a nice cue, a nice tip that I will show you so you know when breakouts are good or not. This is how I look at it. This was definitely double top here. I will zoom in. That is why you need to have your chart zoomed out before you start to trade. This was double top, right? The price went here. It made a breakout of 10 pips and it went down. Why? Because, guys, slightly to the left, we had, watch this, previous day's high. So this was this day high here. These boxes are useful for you to spot daily highs and daily lows, because these boxes are actually telling you about daily highs and daily lows. So here, guys, you see, very easy to distinguish. High, high. The high of previous day was respected. That is why the price went heavily to the downside, because this was actually rejection, not this double top. This one was good, guys. Watch what happened to the left. Quadruple bottom. 1, 2, 3, 4. There was no way. This was so-called no-brainer trade. The hardest thing here is to spot these guys in real moment. It's not easy to spot these kind of things, these kind of movements, guys, simply by looking at charts or thinking that charts will show you this automatically. You need to be very, very, very careful. You need to be very fast in spotting those kinds of breakouts, because if these breakouts happen, guys, the chance is that you will be having a no-brainer trade. Guys, these are no-brainers. They don't happen each day. They don't happen that often. But good thing is they happen, and it's a good thing to know that those things happen. Just try to spot it. Try to spot it. Watch this. Double bottom here, double bottom there. Wow, what a breakout. Very, very, very strong breakout. Watch for these cues. They might really help you. Next thing is high momentum trading. High momentum trading is, we already covered it, trading by Marubozu candles. When you have strong rejections and when you have things that you want to trade. You already know what high momentum trading is. You spot Marubozu candle. Then, guys, I will zoom in. Then you draw Fibonacci, in this case from top to bottom, if it's bearish. Like this. And what happens? You want to trade when price gets to 61, 78 and 88.6. You remember, we already covered this. Yes, Leon, thanks for noticing. Do you see the slide now, guys? You should see now. Excellent. Thanks for notifying me. Okay, so Marubozu candle. From high to low, you draw Fibonacci. Where is your entry? 61.8, 78.6, 88.6. Assuming that the price had gone somewhere around this zone, we would have placed our short entry, right? That is how we trade our high momentum candles. But what if the price simply doesn't reach our entry spot? Okay, guys, this is another tip from me. If the price does not reach 60, 50, 61, 78 or 88.6, good thing is watch for breakout of Marubozu low, because that is the indication that bearish pressure is even stronger in now moment, because there are no buyers here, guys. There are no buyers here. That means that sellers could show instantly. And the thing is, you can watch for possible breakouts, okay? Breakouts. Here, this was a breakout. Then it went even more to the downside. How to manage your trade? Simply, you don't want the price. Let's say if you open your trade here at the breakout, you don't want the price to go above 38.2. Okay, 38.2 is something that you should always be careful if you're trading breakouts of high momentum candles without getting them to 61, 78 or 88.6. So here, this breakout happened there. Always put your stop loss around 38.2. Don't go, guys, here. That would be really unjustified. You cannot place 140 pip of a stop loss. So this is okay, 55 to 60 pips. And try to get with the trend. Watch what happened afterwards. So those are things that you only can go through when you have screening time experience. It's very hard to explain these things to guys who are new to trading, who just want to trade with simple systems. I always say systems are good for traders who want to get an entry ticket to Forex trading. But then usually you either use expert systems, such as Chris and I have been creating, and systems that we were presenting you on webinars, or you can get some snake oil systems that are not worth a dime. It's just a snake oil for marketeers to sell and to get money from you. If you use logic, no matter if you use, let's say, trading systems or price action trading, you should always use your logic, guys. So these kind of things, now moment buyers and sellers, can happen only if you watch carefully and logically price action. Trading is always speculation, so we cannot always be sure, and we cannot be sure what will happen. But if you use your healthy logic, that is when you come to some conclusions and you can draw conclusions. So if this was Marubozu high momentum candle, usually Marubozu is retested and new sellers appear around 61, 78, 88.6 Fibonacci retracement. That is where you scale in. First entry here, second entry here, third entry there, stop loss above high of Marubozu candle, and your risk is not big because you are scaling in. Your exponential profit, your profits should go exponentially up when you scale in. But if you miss the trade on Marubozu high momentum candle, watch for breakout below, because now moment sellers are there. There are no buyers. They're not existent. Place your stop there and ride with the trend. Next tip is wolf wave. I need to go to my screen. This is just an indicator, guys. That is not that accurate, just for, but it's okay for spotting those waves. It uses zigzag. Don't pay attention to this cell. This is a mistake in the coding of this indicator, but it's good just to show you examples, guys, of wolf wave. Traditional wolf wave teaching tells us that is how Bill Wolf actually taught traders to trade with his wolf waves. I have a little bit, you know, guys, I've been modifying some teachings from famous traders. Also Steve Nissen candlesticks, I modified them to be suitable more for forex trading. Also I modified Mr. Wolf's teaching about forex trading of Wolf waves, because he was mainly, as I remember, he was trading indices. He was also trading stocks and equities. And here, guys, we are dealing with forex market. Forex market is different compared to other markets. So what I wanted to tell you about Wolf waves. Traditional teaching tells us that when wave 5 is printed out on the screen, so this is 1, 2, 3, 4, 5. This is when you open your short trade. That is classical Wolf wave teaching. You can also read my blog. I have, you know that I already published a blog on Admiral Markets a couple of months ago. It's called Wolf Waves and How to Trade It. I simply use other things. I draw a line from 1 to 3, and I'm waiting for the breakout of 1 to 3 trend line to give me an estimated price move towards EPA of 1 to 4. Estimated price at arrival. That is how we do it. The main problem that I have encountered with classic teaching of Wolf wave is that this wave 5, especially guys, it's very hard to use it. I mean, if you're focused on a lot of different aspects of forex trading, it's very hard to spot it by yourself. And the problem is that if you think that wave 5 will stay like this, it wouldn't. Because this wave 5 can repaint. What does it mean? Let me tell you that, let's say, this was wave 5 here, and it was printed out. But what if the price actually went up above this 0.5? You know what happens, right? Because you have already encountered this so many times in your trading career. This number 5 or zigzag or whatever, call it a wave, it will be higher, and this will repaint. Guys, this will repaint. Okay, so that is what happens with, this is just for your for showcase. So how we can, let's use also other example. If we see now moment Wolf wave, same here, guys. Okay, watch this. 1, 2, 3, 4, 5. You see, I know personally because I was watching the price. This 0.5 was actually here. And now it repainted. It was there, and now it repainted there. You see now what the problem is with traditional Wolf wave teaching. I don't know, maybe there are some indicators that can, but still, it's not about indicators. This is about price movement. If the price breaks previous low, wave 5 will repaint, guys. So if you open your trade here, you would have been now in a loss, definitely, guys, because you see the price went down. But let's say that you used, even though the price is very, very bearish here, this is 1 to 3. At least here, at the breakout of this spot, you would have made something, 7, 8 pips, it doesn't matter. This is heavy downtrend, so we don't trade Wolf waves when there is a strong downtrend. Especially not today, because today is bank holiday. This is not a good example, but just let me tell you that 1 to 3 breakouts, in my opinion, are much more significant than 0.5, simply because of that repainting that might happen when 0.5 is extended, guys. Do not be fooled. It's very, especially, guys, another example. You see here, 1, 2, 3, 4, 5. Okay, your entries here, let's say, when this candle closes. But what when this candle goes down? This 0.5 will repaint here. So you see, it's not that good. So that is why I always give you setups, and you saw that on last live trading webinar. I always give you setups when you can actually trade 1 to 3 breakout point. This is good example of 1 to 3 breakout. 1, 2, 3, 4, 5. Okay? And here, guys, you see, this 0.5, let's say that it was here. You would have probably closed your trade here in a loss because number 5 repainted, was definitely repainting at the time, by the time the price started to reverse. But 1 to 3 never repaints, guys. 1 to 3 is always firm because it's not dependent on of 0.5. 0.5 can go up, but 0.1 to 3 is firm. So we just draw a trend line here and wait for 0.1 to 3 break. And you see much more pips here than if you traded this because you would have been stopped out. Okay, so 1 to 3 points is wolf wave trading until I personally see the opportunity how to use 0.5 to be that precise. I won't be talking about 0.5. I will be focused on 1 to 3. If anything happens, you will be the first to know. And finally, compounding. Guys, have you ever in your Forex career tried to use compounding or trade by using compounding spreadsheet or chart? This is compounding. This is compounding calculator. I already shared it with you, so you should definitely have it. Here, starting balance was 10,000. Lot size is 1 standard lot. And this happens when you make only 10 pips per day. Only 10 pips per day, guys. Nothing more, nothing less. On 10,000 account, with 30 pips of stop loss, 10 pips per day will get you this. After month 6, you will have $32,000. Now, I know that probably 99% of you have never made this. Why? Because of psychology. Because you simply, human mind is not programmed to do things like robots. This can be achievable by coding an expert advisor or a robot that will make 10 pips per day with 35 pips stop loss. But the main problem is how to optimize it, when to trade it, when not to trade it. As Ilya said, the whole year was ranging, market was in a range. And if there is a range, most of robots will fail. Up, down, buy, sell. These 10 pips per day will become probably 30 pips of a loss each day. But let's say that you want to trade not with robots, but using your own logic. Try this on demo account. Try to make 10 pips per day on $10,000 and watch what will happen after a month. Be conservative. Treat your demo account as if it were a live account. If you don't want to use 10 pips with one lot, you can use 20 pips with 0.5 lot. You can use even 30 pips with 0.3 lots. So if you're an intraday trader and you have a good strategy, you don't want to risk big, okay, use 0.3 lots. More or less, this will be your result. This should be your result. This is simple math. This is not a trading system. This is not science fiction. This is simple math. If you can achieve 10 pips per day with $10,000 with trading one lot, then this is achievable. So my advice is try to trade with compounding. Why not? Give it a chance. You don't need to go live if you're not ready. But try to use it on your demo account to see how it goes. Maybe this will help you achieve better results. Maybe this will help you to become consistent. At least you should be learned discipline, guys. You should learn discipline. That is why I'm telling you, give it a chance, give it a try, give it a go. Okay? Now I will go with some comments. Here, Ilya, would you advise to draw Fibonacci after spotting a master candle to trade much before the breakout? No, Ilya, I have never traded master candles with Fibonacci. Really, I have never traded this. So please stick to main teaching how I did it. Simply use master candles. Don't think about Fibonacci. I mean, you can try it. I have never tried it. Christian, Nenad, myself, I trade mainly daily time frame. Master candle respect on daily. You need to test it, Christian. Go to my master candle price action training school and just apply the same rules on daily time frame. Of course, daily time frame will always have most of the time more than 35 pips. But try to spot a valid master candle and see what happens after it breaks. I think that it should be respected on daily. So try to trade it. I think it should be respected. Ilya is commenting, you are #1 of teachers in trading because your webinars or pets are for free. Everyone can measure your performance watching session recap. Of course, Ilya, thank you a lot for this comment. And also, guys, you will also see many times that I make live trades on Wednesday live sessions. And those are market orders also. Last time we had a market order and 2 pending orders on Wednesdays also. And Ilya, I agree with you. He's saying another risk reward gravestone. 70% of the time in the year, markets move sideways, not in strong trends. Exactly. And that is why you will see a lower ATR. And Ilya, you're 100% right. When markets are ranging, it's almost impossible to make consistent money on good risk to reward. It's almost impossible. You need to change your mindset to be a range trader, not trend trader. And it's hard, guys. I am not good in range trading. I am a trend trader. I can also consider myself to be, let's say, good counter trend trader. But I am bad range bound trader because my mindset is not programmed to trade in ranges. I always aim to make entries where big banks make entries. Big traders, institution funds. That is why I use confluence concept, POC zone. That is why I want to be early in the market, not late in the market. And that is why I perform good in trend. When market is ranging, I'm not trading it. But fortunately, there is always in Forex market some markets that are trending. Let's say pound yen, euro yen. If you see that equities are making the move, you know that yen pairs should also make moves. So instead of trading bad euro dollar, bad range in euro dollar or New Zealand dollar, get to pound yen, get to pound New Zealand, get to Australian dollar New Zealand or New Zealand yen. You will always have some opportunities to trade markets. If you see that dollar, New Zealand dollar is ranging or Australian dollar, get to dollar CAD. After some movement in oil or something happens in the market, you see a new trend, then get into dollar CAD trend. You have plethora of markets to choose. Don't stick to a single market. Because if you stick to a single market, it's just a matter of time when you will be trapped in range-bound price and you will not be able to trade it. Ilya, can we have the color template and color CCI and boxes indicators? Of course, Ilya. Send an email and I will send all these indicators. You can put it on your chart and call it a template, whatever you like. I can send it to you. Yeah, send on email. And that was it, basically. I don't see any further questions. Eric is saying Great practice advices, all understandable. Psychology is problem. Hope to see you and talk to you in Ljubljana on 4th of May. Yes, guys, I will be having 2 seminars. Ljubljana is the first seminar. It's Slovenia, is the capital of Slovenia. And on 5th of May, I will be heading to the capital of Croatia. It's Zagreb. And I will also have a seminar there. So if you have time, but of course I will be speaking in Serbo-Croatian, Croatian, Serb, whatever. It's a Slavic language. So I'm not sure that people from the rest of Europe will understand me. But at least you can come and chat with me after a webinar. You can, we can speak, of course, in English. But for people from Slovenia and these parts of Europe, feel free to come. It's of course free seminar. I will be teaching, guys. I will be talking about the holy grail in markets, and also the importance of intraday trading, the importance of having a good system for intraday, and so on and so on. How to sell also, what pairs to trade, which markets, and so on, with my friends from Croatia office. So feel free to come, really. Also, guys, don't send me your emails now during this webinar. If you want to send me a question, or you want me to send you the indicators, or to send you templates, whatever, please send me an email. My email is tarantulafx@gmail.com. And again, guys, for all of you who are celebrating Easter, I wish you a happy Good Friday to you and your families, and I will talk to you soon. Until then, stay safe, trade safe. Cheers, everyone.